Hey everyone, and welcome back to another episode of the GEB America podcast. For many of you, I want to say Happy New Year when you're listening to this. Some of you might be listening or watching this a little later in the year, but either way, we wanted to start off the new year of 2026 a lot like how we did 2025, and we're bringing back on, I think he may be one of the few that's come back for a third time. Jerry Robinson joins us. Jerry, good morning.
Hey, great to be here. Thanks, David.
The views and opinions expressed on this program are solely those of the speakers and not necessarily those of GEB America, Oral Roberts University, or their employees. This program is not intended to offer investment, financial, medical, legal, or any other advice. Viewers should consult a subject matter professional regarding any such matters.
So Jerry is, he's an economist. He's a guy that understands the world of finance. And we thought with 2026 starting, we wanted to obviously in the very near future bring on some people to talk about your diet and talk about things you can make adjustments to 2026. But in 2026, having a healthy response to your financial journey is really important. Most people at the beginning of the year are like, okay, I kind of let 2025 get away from me. So Jerry, what are the things that you're seeing? And as we kind of have ended 2025, we're starting the new year. And what are the things that you're kind of observing in our world with the economy and all these things we hear about in the news, the tariffs and interest rates, the Fed, all of that?
Well, it's been an eventful year, that's for sure, and probably not the way that many people thought it was going to turn out. At the beginning of the year, I think there was a lot of hope that there was going to be relief in prices. There was an expectation that we were going to see the inflationary pressures that had been built up due to the pandemic spending was going to ease a bit, and maybe more than a bit. And that would also allow the Federal Reserve to perhaps cut more, and that interest rates would come down as a result of all of that. And that perhaps, the jobs market would improve, and all of these different expectations that people had going into 2025. And it turned out to be a pretty disappointing year for those who had high hopes for 2025. It's been a very tough year. And as we head into the new year, when we look back at some of the things that have happened that have really impacted the average individual out there, well, certainly tariffs are near the top of the list. And those tariffs turned out to be much more punitive than really any economist had expected or had forecast. So they came out back, I guess it was in March or April. And since that time, we've seen creeping inflationary pressures, of course. When you slap tariffs on products, that causes the costs of those products to go up, of course. And so we have seen inflation getting passed through to customers and consumers, whether it be at Walmart, who has said, yes, we're going to do this. We're going to pass on these tariffs to the consumer. And then also we have the kind of a shock as we head into the end of the year. We hear as we move into the new year, the concern is what the Supreme Court is going to say about those tariffs. They could actually upend them over the next few weeks. If that happens, that could be a really big roller coaster for everybody. In some ways, it'll be, if the Supreme Court does slap down the Trump tariffs, which have been deemed unconstitutional by many constitutional scholars, then you're going to see basically a repricing of risk. Whereas when these tariffs, assuming that the Supreme Court overturns them, then a couple of things are going to happen. A, those very likely will have to be paid back. And there was a headline a couple of weeks ago that Costco, one of the third largest retailer in the country, is first in line, ready to get their refund check from the Trump administration for having to pay all of these tariffs. And other companies are certainly going to be right in line behind. So it's a real pivotal decision. But if we do see the Supreme Court bat down these tariffs and say, no, the president doesn't have the constitutional power to do this because we just read the Constitution, then what could happen is you'd have that repricing of risk, and there could be a relief rally that we could hardly imagine. There could be a lot of certainty that returns to the market, And that would also take a lot of pressure off of the Fed to be able to lower rates. So that kind of depends. Now, of course, the Supreme Court could come back and just completely side with the president and say, no, he can do whatever he wants. And if that's the case, then perhaps we could see even more of a further slump into 2026 as the market realizes there's no way out. And in fact, it may even embolden the president to be more aggressive with his tariffs if the Supreme Court rubber stamps them. I'd say that we're kind of in a very pivotal time right now as to what's going to happen with these tariffs, and so much of the interest rate decision and so much of the inflationary pressures are really hinging upon this. So I'd say those are that's the big story, I would say, of the year. But of course, we've seen other economic data that is just softening. I mean, the unemployment rate came out for the month of November just recently, and that number had risen to 4.6%. It's the highest level we've seen since the pandemic era, and it's creeping higher this year. We also see that wage growth has been falling all year long in terms of it's been decelerating. And we see that electricity prices are up dramatically this year. And
people felt that for sure.
Yeah, and so we're kind of getting a double whammy here, and a lot of folks have been hoping for some sort of relief in prices. Up until now, there really hasn't been as much of that as people had hoped for, and we'll have to see what happens in 2026. But my concern is that the way all this stuff works in economics is that there's a lag factor. So you don't just snap your fingers. You don't just cut rates and everything changes.
Right.
It takes time for that to work through the system, David, as you well know. And so that time that it takes to work through the system, don't forget, in the world of economics, you have to remember there's also a thing called politics. And the midterms are coming up at the end of next year, where I guess we're less than 1 year away now from the actual election day. And so usually in election years, the White House will begin playing Santa Claus. I would expect checks to be mailed out to us with the president's name as big as he could possibly get it on the check coming out in 2026. I would expect other types of measures that might be designed to satisfy the voting population ahead of those midterms. So we might see some bennies coming out of the White House ahead
and that's
of
because
that.
Historically, the team in power, in this case, the Republican, you have a president and a majority in the House and Senate. Typically, in an off year in that midterm, you lose, some elements within the election. It's like a turnover.
Right.
It's happened historically a lot. There are some people that think that could be a little different this fall. I guess we'll wait and see. Simply because of the way things are kind of very, very polarized. You have a very socialistic style agenda and a very populist style agenda, one against the other. So I do think that we might see that. Yeah, like you said, checks, tariff, rebates, things like that, especially if the Supreme Court upholds things, there might be an emboldening opportunity for the White House. What I'm thinking is, to the average person that just, punches a clock, or they work in a business, they have their own business, maybe they're even in a corporate setting, or they work for nonprofits. They're saying, hey, I get all that, but, and I know prices are up, but I still feel like I need to have a strategy for this year. I want to be able to save. I want to be able to have things. I want to be able to retire one day. I want to be able to take that vacation again. I want to be able to pay for college. What are some things that, in light of all this uncertainty, that you really feel like is the kind of things that you recommend to your group, those that are a part of kind of the follow the money group that is your core?
Well, we go back maybe 15 years when we started followthemoney.com, and I wrote a book called Bankruptcy of Our Nation, which talked about inflation. It talked about fiat currency. It talked about the national debt, which, by the way, speaking of the national debt, that the national debt has risen in 2025. It has risen $2.3 trillion as of the beginning of November. So we still have a couple of months left to tack onto that. We're talking about a $2.5 trillion addition to the national debt in a single year. And remember, that has there's no pandemic, right? There's no world war that I'm aware of. And so because of all of that, we have this massive, massive debt that's weighing not upon the president, not upon the Congress. It's us, you and me, David. We're, basically they're the guys who spend it, and you and I are the guys who get to pay it. And so, we get to fund it and they get to spend it. And so that's what's happening right now is we're living in a time where they've kind of cast everything to the wind. They're kicking the can down the road. And the individual who's listening to this right now, they rightfully should be thinking to themselves, who's going to protect me from this out-of-control government? Who's going to protect me from these wild-eyed politicians who spend like drunken sailors? And some of the things that I would, that we've been saying for the last 15 years was, and this is not blanket advice to everyone, but it's general advice that, and I'm not a investment advisor, so they need to talk to a trusted financial advisor for their own situation. But, some of the general recommendations or suggestions we've made, things that I've actually done too, is just to buy hard assets. So we've bought gold and silver the last 10, 15 years. That's certainly worked out well. Anybody who bought gold or silver over the last 10, 15 years is in the black completely. They're making money. Another thing that we've done is we have encouraged people to pay off debt. We actually have a really cool debt repayment strategy for anybody, no matter what it is. You got student loans, you got mortgage debt, whatever the case might be. We have all these free resources on our website at followthemoney.com/debt. So if you're struggling with debt, that's something to keep in mind. Those are free resources for you. Another thing we've talked to people about is also just owning high quality assets. So it's kind of like the game of Monopoly, David. Imagine playing the game of Monopoly and going around the board over and over and over, but saying, I'm not going to buy anything. I'm not going to buy any properties. I'm just going to pay the rent. And we would say that's kind of a dumb strategy for the game of Monopoly. You got to obviously own assets to win. But that's what's happening in real life, is that many people are literally just renting their way through life. They don't own assets. And for these people, they are the ones who are going to bear the worst of it all, because in an environment like ours, where we have this money creation and we have these out of control spending, one of the key or primary beneficiaries of that are asset prices. If you don't own assets, then you're not going to benefit from those rising prices. So one of the things we've been teaching people for years is to own high quality assets. Some stocks, some gold and silver, some digital assets. Certainly real estate, good neighborhoods, real estate. So all these different asset classes that we can add. And I would say that should be a goal of someone out there who, if they don't own assets or if they feel asset poor, that's something that they can do. And it's not too late, because they're going to continue pumping up asset prices through their policies. And so that's one of the most important things people can do. And the easiest way to do that for most people, David, is just to dollar cost average. They can dollar cost average into their 401k. They can dollar cost average into their IRA. Right. I would prefer to do it in a tax deferred area. And I would make this last comment on tactics and strategies to say that, obviously, if you can save that money, let's say you're less than 50 years old, 55 years old, you still got 10 years for retirement or something like that. As long as you have a little bit of time, then the money really, if you can, should be going into a Roth IRA or a Roth 401k. And the reason is that you would rather pay tax on the seed than on the harvest.
Pay on it now.
And pay on it now. And what we know is that over time, if people don't do that, if they don't put some money in that tax-free bucket of Roth, then they're going to be a sitting duck whenever they go to take out their traditional money and they find out that a nearly bankrupt government is going to be able to decide what that tax is. So
there's no telling what it could be.
There's no way to know. It's like putting your money in a black box, locking it, giving the key to the government, saying, just give it back to me whenever I turn, whatever age. and they can make the rules. So they can tax you more. They can put a distribution tax on it. So I would be trying to put that money that I'm saving for retirement in a tax-free box, pay the tax now, pay it on the seed, not the harvest, and then let that grow. That's another thing that people can do. It's a minor switch. You just put money in this bucket instead of this bucket, and it actually can really maximize your tax-free income in retirement.
Yeah, figuring out a way to outpace inflation. There was a time when they didn't tax your Social Security. And in this new 2026 year, they're giving a credit. They're giving an amount, and I believe it was. I don't remember the number. I don't know if you do. Up to a certain amount of your Social Security, you could basically get a rebate or a write down on your tax, but you're still getting taxed on it. So you made the money, they kept the money, and then when they give you the money back, they're like, "Oh, we're going to take a little bit out." So I think it's important for people to realize that people like you can really help people understand, because it really is about education. It's amazing to me every year the people that I talk to that are like, "Man, have you read anything about the Federal Reserve, or have you ever spent time to learn about, like you said, gold and silver? Man, silver is really up this year." And it's like there are a lot of people that I think that are they're waking up from the Matrix narrative of they've just kind of been going along, plodding along in life, working their job, putting their kids through school, saving maybe into their 401k, but they haven't educated themselves what's in that, or they haven't taken advantage of the match to the complete full ability, and maxing that out, taking advantage of that free money. And so we want people to, through this program today, is to hear and understand what are some things and some areas that you can learn, you can research, because the more you know that saying from when we were kids, the more you know, the more you grow. The more you understand, the more you have the ability to make sound decisions for you financially. Just like, for years I would hear things like, "Oh, you don't want to finance this, or you don't want to finance that," and now, think about it. Any store you walk into at the register, "Hey, would you like an extra 10% off if you apply for a credit card?" And I've told my kids, I'm like, "Don't do that." Like, that's a sales tactic. That's not something but yet most people don't even think. They just go, "Oh yeah, sure, 10% off." So it's a short-term savings to have now another instrument of debt, and then now have another credit card on your account, and to have another credit pull on your credit rating. And a lot of times these things are very prevalent and right in front of us, and people just they don't know because they haven't educated themselves.
True. Yeah, and that lack of financial education is really the death knell. It really is. There's a scripture that says, "My people are destroyed for a lack of knowledge." Yeah. And I think that is a very appropriate here. Sadly, we don't have good education on finances in high school.
Nope.
When we get out of in college, they rarely even teach you how to write a check there either. And so you get out into the world and you find out there are financial educators, but they happen to be banks. They happen to be big Wall Street banks, and they want to teach you about money. And so sadly, this is where most people get their education, is from the big financial institutions who have a vested interest in, of course, taking all of your money that they can and holding it as long as they can and giving you back as little of it as they have to. And so, I think education is key. That's what we've spent, many, many years every week laboring to educate people through followthemoney.com. That's what we literally do. It's so much education on investing, on trading, on saving, on giving, all of these financial topics. And talking about the matrix, that you were talking about earlier, another part of waking up is also the political side. I think a lot of people are also realizing that, hey, this political game is actually hurting our country. Remember whenever George Washington, I say remember back then, remember when we were there? No, but yeah, right. But George Washington, he hated political parties. All these founding, they despised political parties. They said, this is exactly how you destroy your country. Look at the intact, you brought it up earlier about how polarized the nation is. Why? Because of these stupid political parties, right? That absolutely positively are destroying our country. They're destroying our country. Their narratives are controlling the media along with big business. They're all in bed together, and you and I ain't in the club. You and I are going to pay the bill. And so waking up also from the annoying political game that we find ourselves in, it never stops. It's like chasing your tail. It's like insanity, the definition of insanity. Thinking that, what's the old definition? Doing something.
Doing the same thing over and over.
And expecting a different result.
Yep.
Exactly. This is the definition of politics here in America. So I think people, spending more time, learning more about how to be good stewards as opposed to learning more about what some politician thinks,
Right.
I think that's a much smarter idea for most people. But politics and all of this and the news, it just fills our brain. Most people can tell you what the score was on the game. They can tell you what Trump said yesterday. They can tell you, this or that, but they have no clue how much money's in the bank. They don't know how much they saved last year. They don't know. They don't own any assets, right? But they know all this stuff about things they can't change.
Right.
What I would say is focus upon the things that are in your control.
That's right.
And the things that are outside of your control, give them a penny, give them 2 pennies, but don't give it your whole attention. And that's what these media outlets want. That's what the politicians want.
Yep.
They want your eyeballs 24/7. They don't deserve it. They don't deserve it.
I have a good friend that has been a frequent guest on here, Dr. Phil Cook, and he made a statement that attention is the new currency. And it's so true. It's, because if you're wasting your time in a certain area, if you can get distracted by something, whether it's a sales message, and I'm not talking about anything nefarious, it could just be the busyness of life. You get distracted by things. You're wasting valuable time that you could be spending with your family, that you could be learning about how to better prepare for the future. And you mentioned a minute ago, as people of faith, we are told to be good stewards, right? God expects us to do that. So being distracted by all these other things, I think you end up right where we are right now, which is the beginning of 2026, and you look back and you're like, oh man, what happened in 2025? All those goals I set, how many of those resolutions did I not fulfill? And that's because resolutions are set up from the beginning to fail, because deep down inside, and I've talked to counselors about this, most people know what they need to do to get to change. If you're heavy or you're struggling with your weight, most of the time, unless you have something that's medical or genetic, you know that what you need to do is eat better and do some exercise. Just like financially, you shouldn't put that meal on a credit card. You should go, no, we're not going to go eat out. No, we're not going to go buy that new car. We're going to look for a used car. And so for the people that are listening, that are like, okay, you guys have talked about a lot of stuff. I'm with you. I need to educate myself. Where do you tell people to start? So if you're just like, have this boom, light bulb moment, I'm going to make 2026 different, because Jerry and Dave had this podcast where they talked about making changes and doing things differently for being that good steward. Where would you tell people to start?
Well, we've actually laid all of this out on our website for free. So obviously we do have a membership there where people can get tons of extra stuff. But just for getting started, we created something called our the 5 levels of financial freedom. You can go to followthemoney.com/5 levels. This is the same process my wife and I went through many years ago. And it walks you through. Level 1 begins with saving money, creating a giving plan, right? Having food and water storage, basically kind of preparing for the worst. Level 2 then you move in and start taking a look. Do I have a will? Do I have a trust? Do I have life insurance? And you look at all of your different insurances and figure out, can I raise my deductible, lower the cost of the insurance that way because I have savings. Obviously saving up to 6 months of your gross income, keeping that at all times. We call that the liquidity bucket. And then of course when you think about I have a 3 bucket strategy I'll talk about real quickly. So you have 3 buckets when it comes to your actual investments and savings. Not all your other stuff. You have obviously estate planning and you have charitable giving planning, all that. I'm just talking about the actual saving and investing aspect. And so there's 3 buckets you can think of in your head to simplify it. Bucket number 1 is the liquidity bucket. That needs to stay full at all times. It should be 6 months of your gross income. We say that's ideal. It's actually, I would say it's vital that everybody have that. So you don't have to whip out the Visa if you have a flat tire. You don't have to rely upon debt to get by. You need 6 months of liquid savings in that bucket at all times. And then you have 2 more buckets. One's called safe growth, one's called risk growth. Most people throw all their money, including that savings money, right into the risk growth. They're like, I'm gonna swing for the fences. I'm gonna try to hit a home run because I don't have any money. So I'm gonna try to make 100x on this next thing. And then they end up losing that too. So what we do is we teach people to be prudent, to put money across these areas. And of course, you have a risk bucket and a safe money bucket. And the closer you get to retirement, more money should be going into that safe money bucket, right? That's money that has contractual guarantees. If you walk into a bank and you put money into a CD, it's guaranteed to be there, right? If you put money into a cash value life insurance policy, it's guaranteed to be there. If you put money into a fixed annuity, that money has contractual guarantees. Like these are things that actually are guaranteed versus things that are not, like real estate or stocks or digital assets. Those are great to have too. But the idea that we need all risk and no guarantees is kind of how we got in this situation in the first place. So we need more guarantees in our financial world. And so we think that spreading out your money across various asset classes and also making sure that you have some safe money, some risk money, and then keeping that commensurate with your age as you age is just a very smart strategy. But like I said, you can get all that information plus tons more for free on our website, followthemoney.com/5 levels. It's all laid out there.
That's great. For those of you that are commuting or you're listening to this and you're working, I've put that, make sure our team puts that info in the show notes so you can check that out and make yourself available to those different free resources and some of the others as well. So let's talk about this, because this is something that always comes up, and it's always the hot button things. There's two areas, and I have a lot of people talk to me about this all the time, and that is the hard asset, digital asset. So gold and silver, which we've seen silver go just bonkers this last year. Gold and silver and digital assets. Of course, the ones that everybody hears and knows are things like Bitcoin, and there's a couple of others that people are going to recognize as well that are out there, like Ethereum and Solana. What are you seeing when it comes to that? And can you maybe just give a little bit of an explanation of why you think that it's good for people to have some exposure as a diversified investment, thought process or strategy?
Well, silver and gold have kind of proven themselves this year. They've been around forever. People have viewed them as money for a long time. Silver is going up and gold is going up. I think gold's up like 55% last time I checked year to date. Silver's up around 110% year to date. Platinum, let's not forget it too. It's up around 100% year to date. But these hard assets, you don't want to see that happening in your currency. Okay, so the way these things work, it's like a seesaw. If I say, what's the price of gold? You would say, well, what currency do you want it denominated? And you talk about the euro, the yen. Well, I'm talking about the dollar. Well, if I'm talking about the dollar, we look at silver and it's up 110%. Is that good? Is that a good thing? That's actually a terrible thing. That's what would happen like in a banana republic. If gold is up 60%, 50 to 60% in your currency, you screwed the pooch. Something went wrong. And what went wrong is that our dollar has been sinking all year long. The dollar has been devalued. Like I said, that national debt up $2.3 trillion this year alone, and that dollar is just suffering right underneath these.
You're saying the correlation is the combination of the devaluing of the dollar and the fact that our debt has continued to rise is why more people are putting their trust in gold and silver?
Well, they're running to it. Mainly central banks and sovereign nations are buying gold. You also have individuals who've always been buying it. And you've these gold bugs who've been gold bugs forever. And gold and silver are the beneficiaries of poor monetary and fiscal policies, and boy, do we have those. And so we have very poor policies right now, and that's causing what you see. The dollar is coming down. That's not a good look. Gold and silver are rocketing up in our currency. Not every currency, but in our currency, that's not a good look. At the same time, you also mentioned Bitcoin and digital assets. So that's another area that we also like and have been invested in for many years. What's the reason why we've seen, I think, a decoupling between gold and silver, which are going up, and Bitcoin, is because Bitcoin is, it tends to, at least historically, it tends to move according to liquidity and also economic expansion. And when you think about Bitcoin over the last several years, it has gone up, especially in times where there's low interest rates and there's an expansion in the manufacturing activity. Right now, if you look at the United States, manufacturing activity is contracting, and it's been contracting for months and months and months and months and months. And so you rarely see Bitcoin break out without a manufacturing expansion. You also don't typically see Bitcoin take off if liquidity is tight. Well, we just went through we just saw the end of the largest drawdown in the Fed's balance sheet in history. In fact, in central banking history, central bank.
Talk about that, because I think a lot of people just think Fed interest rate. They don't really even understand that they have a balance sheet and they buy, they buy certain things.
Yeah. So December 1st, I want to say, was the day that they ended that. I think it was December 1st. And that was a deleveraging event that began back in the wake of the pandemic. When they began to cut rates, they also began to sell off their balance sheet, because their balance sheet had got up to $9 trillion in the wake of the pandemic. Historically, it was around $4.5 trillion. So they basically doubled it for the pandemic. And why that helped is that they became a buyer of last resort. They were buying lots of bonds. They were buying, and so what that was doing was it was providing liquidity into the system. Well, then they started doing the opposite. They started selling those things back into the market. That began in 2022, and it just ended in December of 2025. And that was, again, the largest deleveraging event in central bank history. There's no central bank that's ever deleveraged. They went from about $9 trillion down to about $6.6 trillion. So that was a good $2.4 trillion that was just literally evaporated from the balance sheet. And that may sound boring economics, it is, but at the same time, it actually impacts people on an everyday basis. So now the Fed has reached the end of that deleveraging, and now they're starting to buy back again. So now they're starting to push more back into their balance sheet. And as that balance sheet of the Fed expands once again, that's where we expect to see much more in the way of Bitcoin rising. I think this has really been a great opportunity to add Bitcoin in 2025. I think there's tremendous amount of upside still left for digital asset class, for those that are high quality, Bitcoin, Ethereum, things like this. I think over time, you're going to see these do incredibly well. Right now, sentiment is poor, and that's usually the best time to buy, right? And that's usually what most investors get wrong, is that they'll tend to want to buy and go all in when everybody's wanting it, and then they go and they sell whenever sentiment gets bad. And so we want to exactly. So we want to teach the reverse of that. When we see blood in the streets, we see people fearing. This is when we go in, and we love to buy during those times. And then when you're in a place like we are now with silver and gold, for example, we own physical silver and gold, but we're on the verge now of about to start liquidating a little bit, trimming, taking some gains. Take some profits. We're not going to sell the whole core position, but we're going to take some profits and then put that money to work somewhere else where sentiment is not so good. And that's the way investing works. Of course, it can be challenging because it goes against your psyche, or goes against your, what you would desire to do. You have to kind of overcome your fear. But that's a huge thing, that if people can get that, they can get that right psychology.
You overcome the FOMO. Like when you see FOMO, which is fear of missing out, you don't pile in with the masses. And it's like, it's true, and I see this in social media, right? If there's a trend, everybody jumps on the trend. Oh, I want to be in on this, because they want to have some fun too. And the same thing is true when it comes to this kind of thing, is people are like, oh, like you said, silver and gold. I've had friends who are like, oh, I'm buying silver. I'm like, well, if it's way up, it might be a good time to kind of hold. But I would
Yeah,
encourage people to.
and the question is, David, is where was that person 2 years ago? Whenever it was down, and people.
Well,
weren't really,
it wasn't an exciting thing to put any money in. Boring,
exactly. Exactly.
And this is where I think it's so important. And I just talked with my financial advisor this week. She called me. It's always talk to your own financial advisor, and they know your situation. Tell them about your goals. Tell them about your concerns, and that's really because they're also there to help educate you. We're just trying to spout some facts here, kind of divulging some fun educational things. One more thing I wanted to get to that I thought was really, you kind of touched on it a little bit, and that is this idea of dollar cost average. Because I've talked to people and they're like, what is that? Well, your 401k, every single pay, if you're investing at work, remember they withhold some money and they put it into whatever mutual funds or ETFs or whatever your company might provide every 2 weeks, or if you get paid once a month or once a week. And that is dollar cost averaging. It's a little bit whether the market is up or it's down. Now, many a time I'll see the markets are down and I'm like, oh, I get paid this week. I'm glad, because this week my dollar cost average is going to get more fractional shares. Can you talk? I know there's business owners out there. They're like, oh, I don't have a 401k. I got a Roth, or I got some, I've gotten a Roth, but I don't put a lot into it. Dollar cost averaging is powerful in pretty much across the board, no matter really the asset. I mean, maybe you're like, well, I'd like to have some silver. Well, this is something you could dollar cost average, or maybe you don't have 80, 90, 100,000 laying around to go buy a single Bitcoin, but you can buy a little bit. So talk about the power of dollar cost averaging.
It's so powerful. And let me say this too. Years ago, I was a financial advisor. I used to be based in Tulsa. I was a Tulsa financial advisor. This was, over 15 years ago. When I wrote my book and I started Follow the Money, I laid down my financial advisory practice. And what I did was I teamed up with other financial advisors who I knew were great guys. So we actually, if people are out there and you're living in Tulsa or you're somewhere in the vicinity and you're hearing what we're talking about, I have advisors all over the place in that area to help you. You can go to followthemoney.com/advice and just request a free meeting. It's no big deal. But let me tell you one of the things that a good financial advisor can point you in the direction of, especially if you're a business owner, is to set up a Roth 401k for your business. This was something we did many years ago. One of the smartest decisions we ever made. As a business owner, you can do that. And you can also self-direct it. So you can have a self-directed Roth 401k as a business owner. And then if you look at the amount you can put into it, especially if you're over 50, you're talking about being able to stuff, tens of thousands of dollars per year, not the $7,000 that you can do in the Roth IRA, but tens of thousands of dollars every single year that you can put into your Roth 401k, and you can self-direct it, which means that you can not only invest it in stocks or mutual funds or whatever, but you can also invest it in physical metals like gold and silver. You can invest it in Bitcoin. You can invest it in real estate. You can invest it in business. You can invest it in all kinds of things. So in other words, it kind of cracks open the opportunity for the business owner. And you got to be a business owner to really get that benefit. But if you are out there, you're a business owner, and you don't have a Roth 401k, by the way, with the Secure 2.0 Act, they also made it where the employer can then provide their contribution match as a business to the Roth. You used to have to put it in traditional. So now a business owner can contribute his money to a Roth 401k. Then he can have his employer, who is his own self, match that amount at whatever rate he wants. And that can also go into the Roth. So you end up with, tens of thousands of dollars each year in a Roth. And then what we do is we have a weekly dollar cost average. I call it DCA Friday. That's what we call it around here. And all of our members that Follow the Money, they get to see what we do. Every Friday, we dollar cost average. We'll buy our favorite stocks. We'll buy our favorite digital assets. And we're not going all in. We're just doing our weekly purchase, right? Like you had mentioned, it's a smaller amount spread out over the whole year. And we just do it every single week. So you're buying some low, you're buying some high. Of course, you're buying more shares when it's low, and you're buying fewer shares when it's high. And that's the magic of DCA, is you end up buying more shares when it's cheap. So that, there's a lot of things that many people leave on the table, and you can't afford it in this economy. You can't afford to leave these good ideas laying around on the table. You've got to take advantage of them. And so a lot of times that happens with a financial advisor. You need somebody who's going to look you in the eye and say, look, this is, and you made a great point about that. A lot of times people try to get their financial advice, on social media, just like trying to get your health advice that way. You want the guy who's taken your X-ray, who has your blood results. He can look at you and he can give you advice. People on social media don't know anything about that. They don't know what you need, and so you need to speak to a professional. Anyway, so if people are interested in that kind of stuff as well, reach out to us. Followthemoney.com/advice. We'll point you in the right direction on all these things. There's so many things that people can do.
Well, and I love that you've got something that I because I'm passionate about education. I've taught it, obviously at the higher education level, and I've taught it at other levels as well. Something I've started doing is creating short soundbite 60-second videos on TikTok primarily about certain things. This is just a highlight. 60 seconds on what is AI, 60 seconds on what is Bitcoin, 60 seconds on what is what is blockchain? I don't have any idea. I've heard it, and I think that to me, it was something that I thought would be fun because I feel like that a lot of people out there struggle with the information that's coming at them. We are inundated with so much that a lot of people just go, okay, it's too much. I can't. I think a lot of people have missed great opportunities. I mean, in some ways, I feel like all those years ago, I missed the opportunity with Bitcoin because I'm like, I don't really get it. It's like guys that are into programming and coding. It's like their little currency. And I just kind of dismissed it, much to my chagrin. This is the great thing about being somebody that, loves to learn. And I hope our team and those that are listening and are part of our core listeners have understood this from the podcast is you can always start. You can always learn something new today. Like, don't be afraid of AI. Learn about it. It's kind of like in your faith, right? Don't be afraid. Oh, I don't really understand the end times. Well, learn about it. Take the time to research and learn instead of staying surface level with your knowledge. And you made a great point earlier. Like in high school, they don't teach finances. I have taught classes that are not on finance, and I've had discussions with students where they will bring things up, and we'll have conversations about just like real life things, like how you handle billing, and if you're a business owner, what's an LLC, and they're like, "What do you know what that is?" Because it's not discussed. So just the basics of credit cards are not free money, and the bank serves a purpose, and you need to save. And all these things are, I think, important. And as parents and as people that have been around for a minute or two, I think it's important to share and to help others around us to learn and to not get scammed or not get taken advantage of as they kind of move through life.
Yeah, absolutely. I concur with all of that. I think that's vital. Education is the key.
So followthemoney.com is where they can find information. Socials, do you have a presence on any of the social media, any places people want to follow?
Yeah, we have a YouTube page. It's FTM Daily. So that's Follow the Money, FTM Daily. And then it's also on X.com at FTM Daily. So those are probably our two major ones. We're also on Facebook as well. I think it's FTM Daily as well. So they can. And being
the skilled podcast guest that you are, you also have a podcast.
We do. Yeah, thank you. We do have a podcast called the Follow the Money Podcast. We've been doing that for, I think it's one of the oldest personal finance podcasts on the planet. We started it back in 2010, very first episode. And we've been educating and equipping and empowering people through that free podcast for years. I encourage people to check it out. If you like listening to podcasts, you like learning and educating yourself on these topics, and you don't want it to be boring, right? You want it to actually make sense to you. That's exactly what we do. So Follow the Money. You can find that all of that stuff you can find at followthemoney.com. You go there and it's kind of a launching pad. You'll find all of the different things.
Well, Jerry, thanks for coming on. Hopefully we won't wait a whole year to have you back, especially as we see things as we head towards the fall and we see economic changes, what's going to happen with tariffs and all that. Would love to have you back on in 2026 a little later on and talk about kind of like where we're at, maybe a little bit of a check-in, and also to encourage people to keep with the goals for 2026, whatever that is that they're working towards.
Yeah, I appreciate the invite, and I appreciate what you're doing to educate folks. So thanks for the invite.
Well, thank you, Jerry, for being with us. And don't forget, everyone, that we appreciate your ability to share and like. So if you're watching on YouTube or you're on one of the other podcast platforms, be sure to follow and like and share this with your friends and family on your social media as well. And until next time, I'm Dave Grove saying thank you for joining us on the GEB America podcast, and we'll see you next time. And Happy New Year.